All right. Hey, everyone. How's it going? Hopefully, you're having a good day. Hopefully, it's better than mine. And why do I say that? Well, I had a good day, but our dryer broke. So until we get a new one, I put all my stuff out on the back deck to dry. And on the news, like, oh, it's going to be a beautiful sunny day, blah, 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 no rain. And sure enough, it's rained. So now my clothes are all wet. But anyway, I guess it'll just motivate me to get my new dryer. So, as expected, the market really didn't do much. And I don't expect much over the next few days. And I'll show you why. It's pretty simple. Major stocks, major sectors are bumping up against resistance. So we mentioned the 533 level here for S&P. I mean, really, I mean, today's about as unchanged as you can get without actually being unchanged. 5 basis point move. So going forward, I think the level to watch here over the next couple of days is, watch this 533 level. If SPY can get through it, next stop on the upside, I would say be around here, 538. So, 5 points, but that might not sound like a lot for SPY, but that would mean that the market's moving higher, and there's going to be parts of the market that are moving more than that. So let's just take a look at, we were watching Apple, and yeah, so this is what we talked about, right? Apple's back to this important price level. Some price levels are just more important than others. That's just how it is. And if you want to be a successful trader, you got to understand that. Notice how this price level here around we're going to call it, let's just see exactly what it is, 217.50. And where did we close today? 217.53. Man, I should get paid for this. Oh, I do actually. So anyway, so Apple found resistance over here, okay, around this level, blasted through it. Now what happens? A lot of the people that sold here regret doing so when the market or the stock blasts through their price. And a lot of them say, damn, if this gets back to my price, I am going to buy my shares back. So remorseful sellers from here, placing buy orders here, turn what was resistance into support. Now we have the opposite. We have buyer's remorse that turns support into resistance. People buy here and then the market goes down. And a lot of the people who bought say, I made a mistake. I want to get out of this. If I can get out of break even, I'm going to. So when the price gets back up to there, remorseful buyers from here, placing orders over here, sell orders over here, can create resistance. So some price levels are more important than others. Seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. All right. And then the other thing we were looking at is Microsoft. And we didn't quite get there yet, but notice the support here. So that's around 412. Microsoft's about 406. All right, what else do I want to show you? Just kind of an interesting technical analysis lesson here before I go. So we talked about how resistance can turn into support and some price levels are more important than others. Well, what do we got going on over here? This is our tech sector ETF, XLK. Resistance becomes support. Resistance becomes support over here. Resistance becomes support. Resistance becomes support. All right. Good traders know where the important price levels are. And that's pretty much it. Levels, trends, momentum, and psychology. There's a lot of misinformation out there. That's why I hope you subscribe to our page here. But people tend to overthink this, and people like I was just looking at some trading site, and it said 75% of trading is done by algorithms. Well, it's probably more than that, frankly. I mean, it's probably 100%, because an algorithm is just a computer program that someone uses to execute a trade. In the old days, you would go down on the floor of the stock exchange and there would be two people, talking to each other. Now, if I'm a trader and I say, all right, I want to buy 10,000 shares of, this tech sector, and I hit enter, well, that could go out. So that's an algorithm, like one of the dumbest things I've ever heard is someone said last summer, they're like, oh, the volume was really light and the market was up. And the person was like, oh, all the traders are on vacation. This is just the algos taking up. Well, who the hell do you think controls the algos? Someone's got to press that enter button. All right. There are different kind of algorithms. But if 75% of the trading, like these people said, was done by algorithms because they're, smarter than other people, well, Aren't there algorithms on the other side? If I place, when I was an institutional trader, if I place an order, buy 10,000 shares, be 5% of the volume, hit it, send it out, that's an algorithm. All right. If I say buy 100,000 shares, be 2% of the volume, but if the stock goes down by 8%, be 5% of the volume. Guess what? That's an algorithm. Algorithms are just tools that people use to execute trades. They're neither good nor bad. Algorithms don't take the market up. The people that are the traders that are placing buy orders through those algorithms is what takes the market up. They don't just exist in the ethos out there, right? So anyway, all right, thanks for my little rant here. I guess I'm a little angry about my wet clothes. But yeah, all right, I'll see you all tomorrow morning, everybody. Thank you so much. Remember, the 217 and a half, 218 level on Apple, if there's one thing to watch, it's that. I'll bring that back up here. Because as goes Apple, the broader market's going to follow along, in my opinion. So pretty clear here. All right, everyone. I'll see you soon. Thanks.